What's up, you guys? Let's take a moment to talk about GameStop stock. I will certainly end up calling it GameStop stock multiple times throughout this video because I can't seem to say that word properly. But this is a video that I think is actually worth doing. You guys know on this channel, as a long-term investor, we typically avoid these types of spec plays, the hype plays, because I think it often adds more fuel to the fire, especially when there's no backing behind a lot of picks that you'll see on Wall Street Bets that we've seen over months and months and months. That said, I believe we are in a bit of a different case, which is again why I'm making this video. And apologize for I need to figure out how to use this darn movie recorder. But clearly, guys, stock is up over 5%. Do I own the stock? Believe it or not, I do. And that's actually why I feel like I should come out and share this stock. Don't get me wrong, by no means have I been in this stock for months like some of these other millionaires that have been made. But we did get into this stock around the $60, $70 level earlier in the week. So clearly it's done quite well. We've made over 400% already, 300% I believe it is. And I want to share with you the thought process as behind why I decided to follow this stock versus 99% of the other stocks that they talk about. And a key chart that you need to be familiar with is something along the lines of this. And this is just one of the examples. FinViz, you can find a number of these. But as you probably have heard about when it comes to GameStop stock, this is this is the most shorted stock, the highest level of short interest in the stock market currently, sitting at 140%. In other words, over 100% of the shares outstanding, the float, there's actually more short interest. Let me, for our beginners out there, if that doesn't make sense, I'll explain this on a very base level. When you go to buy a stock typically, right? Let's assume we're going to go out and buy shares of GameStop. We're going to buy it at $300 and we're going to sell it for $500 a month or a year down the road. That's what we would consider going long. That would be a long position when we buy a stock and we plan to sell it for a higher price in the future. Well, the reverse is also true in the stock market, and you can actually go short on a stock. You can sell a stock short, and that's essentially betting on the price to fall. We've all seen or heard of the movie The Big Short, where essentially Michael Burry shorts the real estate market. Well, that exact same thing can happen with stocks. Now, this is important to understand, at least from a base level, because that will explain why we're seeing these, rapid increase in stocks. This is pretty historic. We've seen it maybe once or twice before in history. But the idea behind shorting a stock is you're essentially borrowing shares. So you may borrow shares from your dealer, from your broker, and you're reselling them to the market. So if I went to go and short GameStop today because I feel like the stock is going down, I could essentially borrow 100 shares or 1,000 shares or whatever I felt I wanted, and I could sell them today at $300 a share. And essentially, I've just generated a $300 per share sale. I've got all this money, but I've borrowed 100 shares or I've borrowed 1,000 shares from my dealer, which I have to repay back. Now, the idea behind shorting a stock is that if the share price does come down, let's assume the share price tanks and it goes from $300 to $200 to $100 over the next little while. Well, then I can go back and buy those shares out of the market at a cheaper price than I paid. I can go repay those shares back to my broker, and the spread between where I bought it at and where I essentially bought to repay those shares, that's profit. That's how you profit from a stock going down. That's known as shorting a stock. And again, to take a look at GameStop stock, this is the most heavily shorted stock in the stock market. And in my opinion, rightfully so. I'm not a huge follower of GameStop, but from what I know logically, it's in an industry that's kind of phasing out and people aren't going to the stores as much and the traffic is lower. Again, I don't follow this stock too closely, so don't quote me on that, but it makes sense that this is a heavily shorted stock from a fundamental level. Now, what happened at Wall Street Bets? And this is where it gets a little bit different. This is where I think these were actually some very intelligent moves made by whoever decided to start this little trend here. Keep in mind, Wall Street Bets, people have been talking about this for months, and they're always talking about some stocks, and a lot of times it's just a pump and dump scheme, and people are just excited more or less for a certain company for whatever reason. But in this case, they've very tactically selected companies that have these high short positions on them. GameStop, of course, being the poster boy, but we're also seeing this, today a company like AMC Theaters, up 260% for this exact reason. They're essentially picking a couple targets that they have. BlackBerry's another stock that isn't as heavily shorted, but it's got a lot of backing behind it. The reason they are targeting these specific companies, let's hone in on GameStop in particular, is that because when people short stocks, when a hedge fund, when a big professional money manager shorts a stock, there's something what's called they may run into what's called a margin call. That we're going to get to this in a second, but essentially if a stock continues to go up and up and up and up and up, again, remember, whoever shorted this stock has to at some point repay this money, these shares back. The dealer, the broker, is not going to let that just run on forever. They're not going to just say, oh, let's let this stock go to $1,000 per share and you don't have to worry about that. They need to keep a certain amount of money basically liquid, basically ready, and basically prove that they have the capital to pay this back. And if they don't have that certain amount, they can actually go through and basically call upon the shorter, or whoever's shorting the stock. It's what's called a margin call. And they basically say, hey, listen, you need to put more money into your account, or you need to essentially close off part of this position. And let me rephrase that. Hedge funds and investors who are short companies, as the stocks continue to rise and rise and rise, as we are seeing, they can be forced to then buy back into the stock to cover their positions. They essentially, when you take on a short position, you in theory have an infinite amount of risk. If the stock continues to go up, well, you have to buy back those shares at some point and repay that money back. So as the stock gets driven higher and higher, well, first of all, investors that are short companies or hedge funds or money managers, they're often forced to go back in and buy the shares to essentially cover part of their position, which is then reinforcing this and driving the price back up. It's kind of this flywheel, which if they got to go in and buy shares, it'll pump back up. It's known as a short squeeze. And essentially what GameStop, the community on Wall Street Bets, has decided to do was to target these companies, put in so much traffic and momentum behind these companies that these money managers, these big smart money, big investors are forced to cover their positions. They're forced to go in and close their short positions, which as a result will drive the prices up further and further and further. Think of it like this flywheel. And again, this is slightly different than what we see most of the time, which is why, again, I decided as a speculation, again, please don't take this the wrong way. You guys know we don't do this type of stuff typically, but from time to time we make our speculations on the channel, and Matrix stock or Loop Insights was one that, we did pretty well on. What I did in my personal portfolio was I took the profits from Loop, so I didn't add on a bunch of extra risk, but I took my speculative position, sold out of Loop, and I put that into GameStop earlier this week. So kind of just a shift for shift. And again, this is relative to your overall portfolio. This is a very small portion. I know that a lot of our investors in our Discord group, which is our little community for our students, they went along with a very similar trade in an appropriate way. I know some people are betting the house on this. They're taking their parents' retirement funds and doing it, and so far it's paid off, but Jesus Christ, I don't even know what the words to say there. Hopefully that turns out well for a lot of people, because anywho, going forward from here, you're getting a lot of price targets, and you're getting a lot of I was gonna say analysts. I wouldn't necessarily call them analysts, but they are actually very intelligent retail investors who are saying this stock could run to 1,000. People are now a little more excited, saying it could go above 1,000, $4,000, $5,000 price targets, because there is still so much short interest out there. And the higher and higher these prices get driven by us and by the retail investors, big time funds are put in a squeeze. And we've seen this obviously with the big one, Melvin Capital being our main, the main enemy. It seems like they essentially lost billions and billions of dollars in this position. Citron's another big one. So yeah, those are just my overall thoughts on the company. Again, would I suggest people to go out and buy these stocks? I'm not going to be in a position to say that. What I can tell you is that I bought into this stock earlier this week on Monday, and it is, as an investment, heck no. Did I invest in this stock? No way. I saw a comment that came in. I'll pop it up on the screen. Someone said invest in GameStop. You don't invest in GameStop. You speculate on GameStop. You gamble on GameStop. You're essentially playing hot potato. You're playing musical chairs. And if you're willing to jump in and jump out before that last chair is swooped out, you could make out like a bandit. But to call this investing, this goes against every single principle and every single rule of investing. So don't even put invest in GameStop in the same sentence. That's not investing. You want investing? Go watch the recent video I did on 2 stocks to buy. We covered Couche-Tard and we covered Raytheon. Those are investments. Those are companies that you can actually assess as an investment. A company like GameStop is not the case. But that said, I mean, who knows where this will go? right? It's you always hear things like this time is different, and that's something that you want to avoid in the stock market. But this is really the first case that I've ever seen where retail investors have driven such a force against smart money, against the news, against mainstream media, that it's making waves. And we have a lot of backing from. I was listening to Chamath he was on the phone on CNBC earlier today. All for it. Elon Musk made his little tweet here and there, which I don't think is that big of a deal at the end of the day. But this is seriously making waves. And yeah, I just thought I'd come out and make a video for this for you guys. Again, this is not financial advice. As always, especially when it comes to a position like this, you don't want to be doing anything reckless or crazy. But hey, if you have a little bit of play money, it's not to say. Did I even look at AMC Theaters? I might have. Oh no, I did look at AMC Theaters here too. Because yeah, this stock is. I mean, they got their targets, and it'll be very interesting to see how this plays out over the next little while. That's all I gotta say, guys. As always, drop a like if you stuck around this far. Hope that this was informative. I'll see you guys in the next video.